All right, guys, good morning. Let's get the seminar started here. So the first thing we want to talk about is basically how to improve our day trading. I'm not sure how many people here are, familiar with the day trading style, but we're going to talk about how do we improve this trading style and how we can capitalize on possible profits that we can make, right? So right now, there's a couple of things that we're going to talk about. At the end, I'll share some strategies with you guys about what I use and how I look at day trading as a whole. So the first concept is before we begin, I want you guys to read this disclaimer. So this is for educational purposes only. It's not intended as a substitute for professional advice. Okay, and you should, if you should decide to act on this upon, during the seminar, you do so at your own risk. Okay. So let's get this going. All right. The first thing you need is clarity. Okay. So pardon the spelling, but are you going to trade forex? Are you going to trade stocks? Are you going to trade options? Okay, that's the first and foremost that you need to pay attention to. Okay, why are you trading a certain instrument? Right. So some people like to trade stocks, and they'll trade stocks that are that are penny stocks. They'll trade options because they think it's cheaper. So they have a certain and some people trade foreign exchange, right? And also, in the beginning, when you're learning, don't pay for subscription services like Options Flow or Discord groups or even like a course. I would recommend that you guys try to figure out like free ways of learning, like learn on YouTube, learn on Udemy. There's all these different sites that you guys can possibly go on. Okay. So in the beginning, you should stop possibly paying for that. Next, make your process simple and easy. Okay. So have a reason why you know yeah. So have a reason for why you're trading, right? Like what is it you're looking to do? What is your end goal? Are you looking to get replace your full-time job with trading? Are you doing this because you're trying to build a passive income? Or are you doing this because it's just a hobby for you, right? Because your psychological mindset when it comes to tackling your trades is the most important tool that you could possibly have, right? So this is something important to do, okay? So the next thing is think about learning before you think about earning. Okay, like this point here, is the key point. Like this is like you should really think about this. A lot of people just jump into trading and just try to think that they're going to be instant millionaires. Chances are you're going to blow up accounts. Okay, so you can read books, that I read, and most traders that do start out, they have lost money. Okay, and they've lost money, and that's where they built discipline. Okay, then you have to understand one important point. Stock market has been here for a long time. Why are you rushing this? Okay, what is your purpose? Why are you rushing this? Okay, what reasons do you possibly have to rush this? Right? So just take it easy, and try to learn. This is a process. This is something that's not going to go away. This is something that's going to be here. Like if you think about stocks that were around before, like you got Nortel, that was a famous one that collapsed in 2000. The dot-com bubble burst. There were so many different stocks around at that time. So stop worrying about the end result and focus on what you want in the long term. Okay, focus on how you can learn, how you can educate yourself, and then build a plan. Like some people, they get confused, and I'll show you what I mean by that. Like figure out your trading edge, right? So what I mean by that is, what is your trading style? Like, are you a day trader? Are you an intraday trader? Like, do you like to swing? Or are you an investor where you want to buy something and you want to hold it for the long run? Like, so what is your trading style? Okay. Why are you trading in that manner? Okay. So you really have to focus on that. And I feel that because people don't really think about that, they tend to get confused. So you'll hear about day traders talking about swing trading, and you'll hear swing traders turning into investors, right? So why? Right? What is your one style? So what I always recommend, and what has worked for me over the course of the years, is that One strategy, 1 to 2 strategies max is what I'm going to use. Just one or two. Okay. So one is my scalping strategy that I like to use. Okay. So my scalping strategy that I like to use, this is my time frame when I use it. I use the 1 minute, the 5 minute, and the 15 minute. Okay. So I'll give you guys an example of that. Right. So I do have a video already posted on this, which I'll attach to the at the end of the webinar. So when we're looking at the time frames, okay. So let's just say we look at a stock here, and this is how my charts usually look. Right. So this is the 1 minute time frame. This is the 5 minute time frame, and this is the 15 minute time frame. Okay. So what I usually do is when I'm looking at this chart, I'm looking for areas of entry and exit based on certain levels of support and resistance being met. Right. If I see certain areas being met, I will take a trade based on that. Okay. I don't care about what an intraday analysis is saying, what is the market saying about, long-term analysis of Tesla. I don't care about that because I'm focused on 1, 5, 15. My profit taking ability is, I'm going to scalp here and I'm going to take maybe a 20 to 30 point move to the upside or the downside. And based on my strategy, I'm going to enter and exit. I don't care about what happens. Most traders, they start to hone in or they start to focus on, oh, if only, you know, Tesla goes above 1035, it will blow up and it will go to, the moon. It'll go to 11, 20 for a reason. Well, you don't know that right now. Let's just say you're taking a trade right over here and you're in the intraday and you're in the green. Just because you hope that from here it goes to 1120, you went from green to red. Why would you do that? Right? Stop looking at stuff that is irrelevant. If you're in this time frame, stop looking for like a 1120, 1130. Just understand what's going on with the market. What are the dynamics? Is the volume picking up? What is happening? Understand the price. Okay. So this is what you guys got to stick to. Understand to learning. All right. So this is based on the scalping time frame. Okay. Next is the intraday time frame. So intraday is this is what I use to swing on the time frame. So I use the 15, the 30, and the 1 hour. Okay. So when I look at all these different time frames, so on the 15, notice how when I go from the 15 to the 30 and then the 1 hour, you will automatically notice how the chart just completely changes from the 1, the 5, and the 1, the 5, and the 15, right? So look at the chart; it's way more clear now. So here, this sets a bigger picture, right? So here, I'm able to see, okay, easily point out that this is an area of accumulation, right, where price could possibly gather here. So I don't have a trade setup going on right now, and then I could possibly have a bigger trade setup once this price level breaks here. So in order to improve yourself as a day trader, so I just showed you guys two separate techniques. Each time frame shows you separate information, right? So you have to decide what time frame and what strategy are you going to use and why, right? You must know why, okay? So give me a second here. So consistency, okay? Why is consistency important, right? It builds discipline, right? So what is this word? Like we really have to figure out what this word is. Consistency is, you must understand that $100 a day is better than, like $200 losses or $400 losses, right? It's better than going from green to red. Okay, so this is really important. So once you have a discipline, you build a focus. You understand the market and you understand the psychology. Limit your trades. Do not worry about hitting $1,000 trade, a $2,000 trade, or $100,000 trade. Don't worry about that. That will come to you. But the first thing you have to do is really focus on, you know, so really focus on the fact that you want to become successful in day trading. or you want to become successful in intra-market analysis. Whatever it is you want to do that. Okay, so your rule should be, if your goal is you make an X amount, and once that amount hits, you stop trading. However, there has to be a stop loss in mind as well. So for example, let's just say your goal is per day you want to make $200. Your stop loss should be maximum at 100. So for every time you hit $100 stop, $100 loss, you're not trading anymore, no matter what happens in the day. So, or the other way, if you make $200 today, no matter what happens, once your target is hit, doesn't matter what the market is doing, you are no longer trading. You are becoming the student of the market. Okay, you're observing what is going on. Think about the same thing with the gym. I'm just gonna give you guys an analogy here. So someone who goes to the gym and they work out right in the beginning when they're starting out, they can't lift 100, they can't curl 50 pounds on dumbbells. They have to start with 10s, 20, 30, 50, right? You have to master the weight before you move on. That's the same thing with trading. You have to master the style before you move on. So once you build the style, you can move on, okay? So make $100 a day, stop loss at $50. Once you have mastered this move into making this consistently $100 a day with a $50 stop loss, up your maximum game to $200 with a stop loss of 100. When either target is met, stop trading. The fact is that even though you may miss key opportunities, okay, even if you miss key opportunities, it does not matter. Those opportunities will present themselves. What you're doing is you're setting yourself up for screen time. Okay, so when you set yourself up for screen time and you're understanding what's going on in the market, why is this happening, you are building, your brain is it's a muscle memory. Your brain will remember what happened. So this week a lot of trades happened. Okay, so if you were a student of the market, you would know what's going on here. For example, like I already have Tesla chart open here. So this week Tesla had a crazy up move. Okay, so if you were playing options here, you could have made a nice killing if you did a swing trade on this. But the only way you would have been able to identify that this was coming, for example, Tesla has Ajay, I'll talk about other stocks than Tesla. I'll talk about that towards the end. So right now I'm just giving you an example because Tesla is open here. So you know what, I'll just look at Nvidia. All right, so Nvidia had a nice move here. So the only way you would have been able to identify these levels is if you're consistently observing what's going on with the market. Okay, and you would have been able to hold through pullbacks and areas of consolidation, because whenever a stock goes up, there's area it consolidates before it continues its move. If area of support is held, the chances of it continuing in its current trend are higher. But the only way you're gonna know that, and the only way you're gonna be able to focus on that, is if you have taken the time to observe Nvidia's moves in the past. What does it do? How is the price impacting this? So this week I made about a couple thousand profit on Nvidia, but I was able to do that because I've done years of trading now, right? But it's okay. Nvidia is not going anywhere. Neither is the stock market, right? So why are you rushing? Why are you rushing to make that 1,000 to 2,000 today when you could be doing that consistently? Everything's about consistency, guys. Okay, so if you are a consistent trader, you will be much better off in the long term. Many people, unfortunately, just get stuck in the mindset that they have to, become very successful very fast in trading, and unfortunately, that eagerness to become successful very fast leads to their downfall. Okay, this is the main one right here: preservation of capital. Okay, so when we talk about preservation of capital, this is the key that people blow up their accounts, that because they don't focus on preservation of capital. Okay, for day traders, this is key. Okay, if you're a day trader in trading options and you're a beginner, you have to practice first. So what I mean by that is practice in a simulated account. Okay, because if you're a day trader and and you're beginning and you're doing this, you will lose so much money because of data decay. And if you're trading weekly options, if you're following signals in a subscription service, and if you're following signals on Twitter or charts, and you don't understand the psychology of that underlying, you don't know how that signal caller or that person is hedged. You may not be hedged. You may be just doing a binary options trade, or you may be going long stocks, right? You must master this. So if you have $1,000 account, you should only be risking maybe $100. That's even that's high because that's 10%. Because you can't really risk like $10, right? In the market, it's very small to do. So you're gonna be risking $100, but there's different ways to manage that risk. Okay, you must, if you're an options trader, you must master the options Greeks to understand the mechanics of options. Okay, never risk more than 2% of your portfolio in an options trade. So if you're risking more than 2% in a portfolio, you are going to lose out. Okay, you are going to lose out, especially if you're doing I don't know how many people know this, but there's called Lotto Fridays. Fridays are Lotto Fridays because what happens is, they're trying to place a trade on Friday, options expires on Friday, and what happens is you end up either going up or going down depending on how their day goes, right? So don't try to chase Lotto Fridays, just understand what's happening, right? So what happens is, like, sometimes what you'll get is you'll get a big play on a Friday, right? So you'll get something like, let me see if I have an example right now. I don't, 18th. So this is the 18th right here on NVIDIA. So 18th was last week, Friday. So if you did take this trade on NVIDIA on Friday, yeah, you could have made a lot of money taking a lot of play, right? This is so because these options expire on the same day on this big move in NVIDIA right in the morning on the 18th would have actually netted you some nice returns, right? So as you can see, it continued to go. But the thing is, this does not happen as much. The other thing I'll tell you guys about is this, a 10x rule. Okay, so this is a rule that I don't have here listed. Give me a second here. So 10x. Okay, so what is the 10x rule that I use? Whatever your trading style is, or whatever your trading strategy is, do it at least 10 times. Okay, if you do it at least 10 times, then you look at the fact that how many times was this strategy successful out of 10? Then you get a percentage point, right? What is the probability of profit when I trade this particular strategy? Okay. The next thing you have to look at is the environment. What is the environment that we're trading this strategy in? Okay, so is it a good environment? Is it a bad environment? Like, what is the environment and what is happening in that environment, right? So is it a sideways market? Is it a bull market? Is it a bear market? Is it a volatile market? So every strategy will not work every single time, but every strategy will work over a period of time. There will be an opportunity to deploy different strategies based on different market conditions. But the only way that you or me are going to understand that is if we're patient enough and we try different things at different times. But whenever I'm trying a new strategy, I do not risk my money. I always try it in a practice account to understand what are the dynamics of this strategy and how does it work. Does it work well? Is it poorly? What is the percentage of the strategy success? That's okay. Even if I miss the current psychology of the market, even if I miss all the moves right now, that's okay. Because I know, I understand that strategy right now. Next time that opportunity arises, I will not hesitate to deploy that strategy because I know the probability of success of that strategy. Okay, so everything comes down to understanding and practicing how that strategy works. Okay, the last topic is on for me. Give me a second here. So for this is a key one here. Once again, for a stock trader, if you're trading stocks or even penny stocks, right? So we just discussed options. If you're trading penny stocks, don't blindly average down. Okay. So let me just give you guys an example of this. I know some people might not like me for this, but it's the truth. So let's look at ACB, our cannabis stocks, right? So if you look at ACB, look at what happened in this stock. Okay, so what happened here was this stock was trading at 160, right? So if you understand the market structure and what is happening, you'll be able to identify clear areas where the trend was changing and a critical levels, and you will see clear levels where you could have stopped out at, right? If you don't see that, I post consistent videos on a daily talking about this, and if you like what I do, please subscribe to the channel. I'll be posting more videos daily, and please like the this webinar as well to help me beat the YouTube algorithm. Okay, so if you see this right here, this is a straight down move here. Anyone who's averaged down into this has lost right now. Maybe cannabis will come back in the coming years, but since 2019, you haven't recovered, right? So let's look at something else. Let's look at QS. QuantumScape. This is a new stock that came out. Huge thing about a battery being backed by Bill Gates. Imagine you started averaging down here, right? Like, you're down all the way here. So the other one is, let's look at Snow. Snow, no real trend, right? You're down here now, like, depending on where you're averaging down. So if you're a day trader, right, and you're looking at this in the sense that, oh, how am I going to make money off of this? How is this helping you? Right? Even if you're an investor, you're averaging down at the worst times. So this is where technical analysis comes in, right? This is where you need to know what the chart is telling you, right? So for example, let's look at other examples of this where this is reversed, right? So Tesla is a perfect example, right? So a lot of people, when they were looking at Tesla, when Tesla was over here, right? Tesla was forming what in technical analysis terms we call a descending triangle, right? And it was getting tight here. But a descending triangle only makes sense once a certain area fails, right? So if price went below this, like this, that's how you know that this works out, and you'll see a rise in selling volume. But if you speculate, meaning if you get into a stock or you get into a trade before the pattern is even confirmed, you're going to lose out because you're trying to jump ahead of the trade. Stop jumping ahead. Wait for the trade to come to you. Okay? Wait for the setup to come to you, because if we went short here, let me just give you an example. If we went short here, you can see what happens to Tesla. Right there, you would have been stopped out. Right? Just keep watching this, right? And it just keeps going, right? Like, this is what happens when you jump ahead of the trade, right? And then you know what happens here? FOMO. Let me give you guys an example of FOMO. So there was a KOS. Was it KOS? No, it was. I think it's called the really popular stock. It was Wish. So people were trading the stock like short squeeze and all that, whatever, to each their own. But if this is your style of trading, where you want to find stocks that are shorter the most and you're looking for a short squeeze, that's perfectly fine. But just do understand the trend is a downtrend. Yeah, you're going to get this pop. Stock went to 14 or something. Take profits. Why are you not taking profits? If you made this profit, why are you trying to go all the way up to 33? What is the reason? What is the cause and effect? What is the psychology that this stock is going to go from here to here? So as day traders, ask yourself, what is the reason? What is the primary reason that the stock is going to change, the stock is going to shift, that the stock is going to make any kind of difference? So you have money on the line right now, right? If you have money on the line right now, you want to save your money. You understand? So if you want to save your money and you want to protect your capital, what is the reason for you to protect that capital? Right? What is the purpose of that? Right? So the purpose of that, obviously, you want to survive the stock market in the long term and you want to make money. But if you're taking trades without understanding the psychology of the market, you are really not going to be successful. Okay, so let's have another look at a different company here that day traders like, AMC, right? So AMC right now is in a clear technical breakdown. So let's say this is a descending triangle. We can look at, this is a support level right here. It went through retest, it failed, now it's doing a retest. If it fails this level, it can easily go down to $8.46. But right now, it's holding this level well, right? So every time a stock moves down, it always pulls back, right? So what people start to do is they see AMC at this level, and they start to buy here. They're gonna think, oh, they start to think AMC is gonna go down further, right? This is where day traders make a mistake, that what's gonna go down further now? It's not gonna go up. This is where FOMO comes in. Like, don't fall for FOMO. Wait for a better opportunity. Everything's about entry and exit. Okay, everything is about that. Like, how do you enter and how you exit a stock? It's all about that. So you should really understand how the dynamics of this works. Okay, so that's simply put everything. So focus on preservation of capital, focus on consistency, and the last tip I'm going to leave you guys with is patience. Okay, this is really big. Patience. Wait. If your setup is not there, just wait. Okay, there's no rush. The stock market is here. It is gonna be here. You do not need to rush any kind of trade. You do not need to rush any kind of stocks. Okay, so any kind of entry or exit, just wait for the setup. Okay, and then learn to read this. Okay, so just really understand that. Okay, and really understand what the market psychology is telling you. Okay. So right now, so that's the quick webinar about how to improve yourself, right? So just you guys can rewatch it again, preservation of capital, wait for setups. Right now, what I'll do is I'll share a couple of setups that I have that I use on a day-to-day, okay? So and then if you guys have any questions, if anyone's here has questions, you guys can ask away, okay? So the first setup that I have for the scalping, I already shared with you guys. I use a 1 minute, the 5 minute, and the 15 minute. And I have strategy here that I use. So I take trades when the price closes above, on the 1 minute time frame, right? Above the 5-day EMA, and right here. So what price closes above the 5-day EMA and the VWAP on the 1 minute, right? And I exit when the price closes below the 5-day EMA on the 5-minute time frame. So right here, right? So as you guys can see, this would have netted me a quick like a point move on AMC, right? So let's look at Tesla, for example. So Tesla last week would have given me, let's see, price closes above. I would have got shaken out here. So price closed above the 5 here as well, closed below here. So this is just in a range, right? So this is where the 15-minute comes in. Like, you can clearly see that on the 15-minute, the bigger time frame, price is choppy. So this is where you can avoid a trade. But if you do take the trade, you can. But this strategy, you can see, okay, so let's just say I took a trade here. It didn't work out. I journal my trade. I journal the fact that this trade or this strategy does not work out when price is in a consolidation. I move on from that. So next time when I see a consolidation happening, or when I see price in a certain area and it's not working out for me, I know why. I know not to take this trade the next time. It doesn't matter that I lost 100, 200, or $1,000. I just know not to take this trade the next time, right? So let's look at my stocks here. All right, the other strategy that I use is when I look for stocks in momentum, I look for, I'll show you guys. Give me a second. So I'll go here on Finviz, okay? And I go under groups and I look and see, what is the relative 3-month to 6-month performance. It's energies and basic materials, and tech is down, right? So what I'll do is, I'll be, okay, so all these stocks are leading right now. These top defensive sectors are leading. So what I'm going to do is I'm going to go back to screeners, and I'm going to go all, and I'm going to go simple moving average above, price above 20, price above 50, right? I'm gonna leave it at that. Current volume above 2 million, right? Average volume above 2 million. Option and shortable, right? Country US, exchange, any, and market cap, you can do any. I usually do mid plus, right? That just finds all the stocks that are here, and then I look for charts that are setting up. So now this is another tip that I use, right? So if I want to find stocks that are in momentum, so they're in above 60, right? So the RSI is hot right now, right? It's above 60, so you can see stocks that are hot are going to come up. So these are stocks that can probably pull back here. Okay, so this is where I find AM or all these different stocks that are ready to trade, and then you can filter by sector. So I know energy sector is doing really well, so I can find stocks that are breaking out, right? So these stocks can possibly pull back. So another strategy that I use, this is a swing trading strategy. So I have here, I use the Bollinger Bands combined with the RSI. So let me just pull up the stock. Okay, so I'll use the daily. Okay, so RSI is hot. Bollinger Bands are up here. This is above the Bollinger Band. So when I look to take a trade here, I usually take when it's above like this. This is the Bollinger Bands. There's 2 standard deviation. Okay, so when it's above like this, right? I will do a credit spread, or I will do a bear call spread on ADM. My target is a mean reversion, so this is the mean line right here. So this is where I think ADM could possibly revert back to. So because I primarily trade options, I'm looking for either a theta decay, or I'm looking for a bull, basically some sort of a decay in volatility, and also a pullback in the stock. So if I'm doing a bear call spread or a bear put spread, so what I'm looking for is price to come down. Okay, so that's what I'm using for. So this only works when the price is extended above the Bollinger Band, which is above 2 standard deviation, and the RSI is above the 60 zone right here. Okay, the 70 zone right here. So this works on this time frame. This could still continue to run, but stocks, like I said, they move in a wave. This is how I identify that, right? So I use Finways to find these stocks, right, that are either overextended or undersold, right? So let's look at like something that was undersold on RSI. So you can clearly see on BABA, price is below the Bollinger Bands, and the RSI is also below 30, right? So these two conditions have to meet. They have to line. It doesn't, if the price is just below the Bollinger Bands, right? Let's just say here, but the RSI is still above 30, I don't take that trade, right? You can clearly see if I took this trade, the pullback is not as strong, right? When price is extended down like this and RSI is below, the pullback is a lot stronger, right? Whereas if the RSI is not oversold, right? See, RSI is oversold, but this is not extended below the Bollinger Band here. So this is one strategy that I'm sharing with you guys for free. So this is the Bollinger Band and RSI strategy. So you guys can clearly see how that works, okay? And you can use this to swing trade. All right, guys. So that's enough for the webinar for today. If you guys like what I did, please subscribe to the channel, press like, leave some comments below. I will be doing more seminars like this on a weekly basis. If you guys want me to do something different, or you guys want me to, explore something, or you guys want me to share my scanners, whatever it is you guys want me to do, just leave it in the comments below in the channel, and I'll try to get back to it, and I'll do my best to follow through with it. Okay, so and if you guys do like what we do, please share the channel with your friends, your family members, or whoever you think it could benefit. So I'm sharing this information with you guys to help retail traders get better at trading. Okay, so this is one strategy that you guys could use. All right, guys, I hope you guys have a wonderful weekend. Enjoy your time. I'll be posting more videos over the weekend, like educational videos, but if there's something that you guys would like for me to see, just send me a message here, or if you guys know me personally, just send me a message that this is what you guys want me to do, some kind of presentation. I'll be more than happy to do it for you guys. All right, anything I can do to help you guys, or help the